Hey, it's Clay at claytrader.com, and we are talking the false breakout and what to do when it happens to you as a trader. Keyword there being when, not if, but when it happens. Breakouts, and more specifically, false breakouts, are just part of the business. It's a cost of doing business. And I want to, in this video, walk you through a real life trade of mine and then give you some reference points that hopefully you keep in mind, just as a reminder that you don't spin out of control and that you can ideally keep yourself grounded in a reality that's going to keep you focused and, remembering the things that matter most. So what we're looking at here is what I thought was a very, very nice pattern here. We have a very well-defined resistance trend line right there. We have the price starting to creep upwards. Now, I know what some of you may be saying, and fair enough, maybe saying, Clay, I think you drew that trend line wrong. If you drew it something like that, you would have bought right there. You would have been already in the green. And fair enough. But also, as a reminder, you are also judging in hindsight. And I'm judging myself in hindsight. So it's very easy to say, and oh, well, that trend line should have been drawn that way. Or, oh, you should have used that trend line. Well, yeah, in hindsight, we know that. But in the real world of trading, so remember, that's lesson number one. You're never going to have like the perfect ultimate trend lines because you don't have hindsight in your favor. But in this situation, I still thought this was a great pattern. And you can see down here, volume was rising as it came up here. So I'm thinking, you know what? This looks like a good breakout to me. Good bull pennant. So again, just to map that out in case you don't quite know where the bull pennant is. And then if we use just even the VWAP down there, which is that yellow dotted line. So if I extend that out, and then just when you factor in the big upwards move right here, and then for you golfers out there, make it a little bit more visual, put a golf hole down here. That was the bull pennant pattern that I was looking for. And yeah, in my mind, I thought, okay, this thing's knocking on the door. We're going to get a breakout, and we could certainly see some momentum in the upwards direction. So let's get this video playing, and you'll see exactly what played out. So I'm watching, and I decided to try to buy. That's where that green line is. That's me trying to buy, and I'm in. And now you can see over here, the P&L flashing around. I bought one NQ contract. So this is futures. I should note that this and the concepts apply to stocks or crypto or anything else. So this just happens to be futures, but what I'm talking about here can and should be applied to whatever. So now you see here, the price has come back down. So not ideal, but you do have to give things wiggle room. You can't just freak out just because a breakout occurs and then comes down a little bit. Like I said, nothing unfortunately is going to break and then go straight up. No, of course, sometimes that happens, but you do want to give things some wiggle room and give them a chance to potentially recover and come back up. But yeah, no doubt about it. Right now, things were not looking the greatest, but again, give it a chance, give it some wiggle room, especially in the world of futures. But anywhere, you want to give things wiggle room. So right now, I'm feeling all right. That's better. Look at it coming back up. Okay, is this going to be the push? That's what I'm hoping for. That's what I'm wondering. So right now, it's just still giving it a chance. You got to wait. And again, down there, you can see the P&L fluctuating around. And right now, honestly, in my mind, still looking fine. It's just trying to consolidate right here. Do we eventually get the push upwards? But you can see right there that trend line has actually gone back to being a stubborn level. But again, you want to give it room. And really, it hasn't done anything wrong. The only thing it's done wrong is not just go straight up. But as I already said, that's a false expectation. But it's not like it's blasted down through any areas of support or anything like that. But now it is starting to look like, okay, I'm not quite sure this is going as smooth as what I thought it was. But you know what? Again, technically hasn't really done anything wrong. It's not like it's, pushed down through. It's still above the 21 EMA right there. So you still got a nice little range. But it is starting to get to the point where it's like, okay, I'm going to have to potentially wave the white flag if this thing does not want to return back around and give me the breakout. So you can see right now it's coming back down. And at this point, not feeling the greatest about it and looking like, okay, this is indeed going to be a false breakout. But you can see it's now coming down at that moving average, starting to push down below there. Want to give it a little bit more time just in case, again, give things wiggle room. But right there, I decide, you know what, that is enough. And right down here, you can see a $250 loss. And there it is, broke out. And I wanted you to see the entire, evolution of that trade and then just totally rolled back over the false breakout. So how do you deal with it? Well, first, and lesson number one, the most important lesson, admit, okay, it was false. It wasn't real. And when you admit that, it's much easier to just cut the loss and get out. which is very, very important. Risk management matters. But you've got to just admit and tell yourself, that was a false breakout. Because as soon as that triggers in your mind, oh, that was a false breakout, it's very difficult to then start to do a bunch of bad things, because if you're saying, oh, that was a false breakout, oh, so let me just continue to like do other things. It's like, well, why would you do that under the premise that it's a false breakout? So tell yourself, false breakout. And then that means, okay, it was false. All right, yeah. And then you got to just cut the loss, because cutting the loss is how losses, or excuse me, not cutting the loss is how losses spin out of control. One of our members, we call him Coach Dan, he has a fantastic saying. And I don't know if it was his, I'm pretty sure it's his saying, but this is what he always says, and I'm always trying to remember it. All massive losses start off as small losses, right? All massive losses start off as small losses. So at this point, you know what? I'd rather take the $250 loss as opposed to having this thing potentially just really start to fall apart. And then I'm looking at a $500, a $1,000, a $2,500 loss. And if you've ever been there like I have, you know things can spin out of control. But here's the other thing that I want you to remember. You can always get back in. If the setup starts to recover, then you know what? It's recovered. And therefore, it might be a good setup once again. As of right now, not a great setup from where I bought. It just pulled back too much. There's too much of a risk that this thing might be getting ready to plummet back down. However, if it starts to show some signs of, okay, it's looking like the pattern is holding, it's looking like the bulls maybe are showing back up, you can always do another trade. And that is the nice thing about futures is I understand the argument from the stock trading standpoint of the options is, well, Clay, I'm under the pattern day trading rule. Therefore, when I get out, and if it's a day trade, I don't know if I want to burn another day trade. And that's a fair point. But that would be, I would say, an argument for considering futures, because there's no pattern day trading rule within the world of futures. So just an FYI there, if your argument against everything I'm talking about is, yeah, Clay, but the pattern day trading rule, you know what? Maybe you should consider futures because as you're going to see, it allows you to potentially get back in. So again, yeah, right now the setup's not looking good. But remember, what to do, a false breakout, admit it's a false breakout. That's going to make cutting the loss better. And the reason why you're doing these is because you can always get back in if the setup starts to recover and look good once again. So now I've jumped ahead a little bit in the future here and take a look at the chart at this point. What are your thoughts? For me, I'm thinking, okay, maybe I got fooled a little bit, but again, all easy to say in hindsight. But right now, I'm liking what I see. I'm seeing a couple of lower shadows right there, meaning the bears have tried to press downwards, but both times the bulls have pushed it back up. I'm still seeing an overall trend line that looks something like this. So going back to the pattern, and does the setup still hold? Does it form? The setup is holding. Now, had that, one candle that I just couldn't risk, had that red candle done something like that, I'd be sitting here saying, I'm glad I took the loss and kept it small. But I'd also be saying, and wow, that just totally wrecked the setup. I mean, that was a nice bull pennant, but that bull pennant has failed miserably. But that's not been the case at this point. It's come down here. The bears have tried to ruin the bull pennant. It just has not happened. So at this point, the setup is hanging in there. And in my opinion, it's gotten even better because now this was a failure to push to the downside. The bears failed in their goal. Once again, due to my entry, and yeah, maybe a little too soon, I just couldn't risk, okay, are the bears going to fail? Because if they weren't going to fail, then that loss would have gotten way too much bigger. So I was just at the mercy. But again, I knew in the back of my mind, I could always get back in. If the pattern recovers, if the situation starts to, look better again, if the pattern holds, and all those things did indeed happen, I knew that I could get back in. So right here, let's see what happens next, because as a spoiler, I'm about to get back in. So just keep in mind, I am at negative $250, but that was still controlled. Nothing, spun out of control. So now let's see what happens. So I'm waiting. Like I said, let's see if this thing wants to approach that trend line again. And I am once again in the trade. So I'm in the trade, and what you'll want to watch again is down here to watch those. I did take two because at this point, I'm liking the situation that much better. Now, it's always a fine line. Was I revenge trading? So I'm going to increase my size. And I hear you, and maybe, but also in my defense, I still really like the setup. I thought this was a really good setup. And also in my defense, it's not like I went from one contract that all of a sudden I'm at like 5 or 10 contracts. I mean, it was 1 to 2. So, yes, maybe you can make the argument that this was just me revenge trading. And I totally understand where you're coming from. But like I said, I would push back in the sense of it was only 1 to 2 contracts. And second, in my opinion, I was really liking this setup. I liked it the first time, but then I thought, you know what? Maybe I was a little too early and I got spooked out. But I can always get back in. So I got back in with the 2 contracts. So let's see how this continued to play out. So at this point, I'm like, uh-oh. Oh, don't do it to me again. Don't do it to me again. But again, what did I mention the first time? You can't expect something in the breakout and then just go straight in your favor. You got to give some things wiggle room. You got to give some things the opportunity to consolidate out a little bit. You can't just always expect for something to break and then boom, right away, go in your favor. But yeah, right now, there's no need to try to play it cool. Your mind starts to play games with you. You got to be kidding me. Don't do it to me again. Don't do it to me again. This is such a beautiful pattern. Don't do it to me again. So, but I'm giving it a chance, And right here, I'm thinking, you got to be kidding me, right? You're going to do it to me again. Come on. This is such a great looking pattern. But again, the chart overall has not done anything wrong. It's not like it's crashed down through any areas of support. It's done nothing wrong. The only thing it's done wrong is not met my false expectation that, when something breaks, it needs to automatically go straight up. So we got to just give it a chance. And now it's starting to come back up. So I'm like, okay, maybe this is the time where it starts to go. And right there, it's looking better. And there we have ourselves a breakout. So at this point, I have locked in one gain, I have sold one contract. So I have one left now. And in my mind, I'm thinking, okay, I could see this thing getting up to those highs. What happens at those highs? I don't know. So that was where my secondary price target was. And you can see right there, I threw out the target right there, right up around this general congestion point of resistance levels. And right there, it did ultimately fill me. And you can see I went from being down $250 to now up $280. And as a spoiler, that breakout kept on moving higher and higher. That was actually up. They were bad exits. With all that being said, again, that's hindsight. Had the price come up here and totally rolled back over, I would be saying, wow, I nailed that. I nailed the exit points, man. But again, that's all just totally hindsight. That's me judging myself in hindsight. So it's easy to say, I played that great. Or it's like, well, no, you played it the way you wanted to play it. And I got the breakout. It came up, it hit my targets, and I was able to wipe away the loss plus put gains in my pocket. But it all started with just, you know what? False breakouts happen. So you deal with it by admitting it was false. That's going to make taking that loss easier. And then you got to keep in your mind, you can always get back in, assuming, like I talked about, the pattern can hold. The pattern can maybe, in this situation, I would argue the pattern started to look even better. And in my defense, I was right. It looked better, and then it got the breakout and got very good follow through. So I hope this helps. If there are any other questions or anything like that, as always, leave those down in the comment section. And then finally, I want to personally invite you to get signed up for this free live online webinar that I'm offering. So if you enjoyed what you saw here and you want to learn more about charting and how I use the tool to build consistency to manage risk, then definitely make sure you get signed up for the free live class. And this also, I cover the approach to the market. A lot of people, and I've been doing this since 2013, so I've worked with a lot of traders. I've experienced a lot of traders. And people, they have the best intentions, but unfortunately, the market doesn't care about your intentions. And you can have the best intentions, but if you have the wrong impressions about how things should be used, how they should not be used, then you're ultimately going to cause yourself a lot of pain. So that's something else I address is let's make sure you have the right framework in mind so that you're approaching all of this with the right guardrails, with the right understanding, again, of how things should be used, how they do work, how they shouldn't be used, how they don't work, and make sure that, like I said, you're in a good, solid spot. So go to claytrader.com/live or just check the link down in the description box to learn when the next live class is. So thanks for watching. I hope this helps. But yeah, get out there and make sure you approach the false breakout in the smart way.